Hello everyone, it's Hiền Nguyen from ST Consulting. So today I'm back with a new topic. In this new series of videos, I'm going to discuss about the Vietnam capital market. There will be at least 4 videos. The first video, I'm going to discuss an overview of the Vietnam capital market so that you can have a broad view how it looks. And then the subsequent videos, I will dig into deeper level in each subtopic. So if you are looking to do business in Vietnam or to do investment in Vietnam, this is the right place to look into. Let's get started. The capital market development in Vietnam has progressed rapidly since the 1990s. The market constitutes 3 segments at the moment: banking, securities, and insurance. The securities market sector currently accounts for around 32% of total financial assets, with 20% in the equity market and 12% in the bond market. Credit institutions share 67% of Vietnam capital market, and insurance premiums is very tiny at the moment. It's still around less than 1% of the whole capital market. This indicates that Vietnam is still a bank-based economy. However, the capital markets are growing rapidly and have been changing a lot in recent years. Also note that the bond market in Vietnam is dominated by the Vietnam government bonds. So the regulatory and supervisory structure of Vietnam financial system, I'm going to look into it briefly. Vietnam is adopting a sectoral supervisory framework. The system is made of the Prime Minister Office and supervising the 2 sub-branches, which is State Bank of Vietnam and the Ministry of Finance. The State Bank of Vietnam's main job is supervising and monitoring the credit institutions. Ministry of Finance is in charge of 2 areas of securities sector and insurance sector. Under the Ministry of Finance, the securities sector is then regulated by the State Securities Commission, which is SSC, and the insurance sector is regulated by the Insurance Supervisory Department. The National Financial Supervisory Commission then coordinates the supervisory work and provides advice to the government and in supervising the Vietnam financial system. So here's how the whole system looks in the chart. Okay. Let's get into the first part of this capital market of Vietnam. Bank credits. Bank credits is largest portion of Vietnam capital market. Banking sector is larger now, better and capitalized, and it offers a wide range of products and services that reach a much larger share of population compared with 20 years ago. Domestic bank credit has reached over 165% of GDP, or it is 3.2 times higher than the bank credit to GDP ratio in 2004. The Vietnam economy has a large GDP growth each year in the last recent decades, right? And the bank credit growth is at a much faster rate. The credit growth rate in the last 15 years, as you look into this chart, is mostly in the range of 10 to 30%. how about the private bank sector? Private bank credit is 123% of the whole country GDP in 2023, just right now. And it is over threefold compared to the bank credit to GDP ratio also in 2024. The chart of banking credit over the last 30 years show dramatic growth in the development of the market size of this banking sector, bank credit in Vietnam. You see that the banking sector has been developing and the size has increasing a lot in the past few decades. It's rather for working capital requirements and consumer credit, not much for long-term productive investment. And also remarkably, the state-owned enterprises account for most of the corporate borrowing. Okay, government bonds make up a large share of total commercial bank assets. Yes, the bank get the deposit from the depositors and put a lot of the investment into the government bond. So I will discuss more details of the quantity and quality and the development of the Vietnam banking system and Vietnam credit system in the coming video. Okay. So how is the securities market in Vietnam? Vietnam securities market is made of two parts, equity and bond products. We are going to look into some important milestones of this market. First of all, in 1992, equitization of state-owned enterprises was set up. Okay, and then in 1996, we saw the establishment of the State Securities Commission, SSC. In 2000, the Ho Chi Minh Stock Trading Center opened. 7 securities companies was licensed, and the first 2 stocks was listed. That was RE and SAM. In 2003, we see the government issued a Decree 144 on securities markets and securities companies. And then 2005, the Hanoi Stock Trading Center established. And Vietnam Securities Depository was established in 2006. 20 of 2006 went into effect. Ho Chi Minh City Stock Exchange Trading Center upgraded to Ho Chi Minh City Stock Exchange. In 2009, the Hanoi Stock Trading Center became Hanoi Stock Exchange. 2010, there was a revised in securities law. 2012, securities market restructuring plan was issued. In 2014, there was a proposal on establishment of derivatives and then approved. In 2015, Decree 42 on derivatives market was issued. Okay, and then in 2017, this financial derivative market was established and start to have a trading. Vietnam's derivatives market is still very small and is only been approved and trade on the index. Okay, VN30. And in 2019, there was a revise of security laws. The decision 242 on restructuring the securities and insurance markets until 2020 and orientation to 2025. In 2022, there was a financial inclusion strategy to 2025 and orientation to 2030. Guidelines decreased for implementing the revised securities laws. As of 2023, the size of the market in Vietnam has grown very dramatically after 30 years. Okay, at the moment we have around 1,600 tickers listed on the 2 floors of Vietnam Stock Exchange. So let's look into the equity market briefly. Okay, the equity market has increased dramatically over the last 20 years. The number of listings, the total capitalization of listed companies also increased dramatically, especially over the last 10 years. Okay, it's increased more than 5-fold in measure of GDP. Okay, rising from only 15% of GDP in 2004 to nearly 86% of GDP in early 2022. The stock market capitalization over the GDP has also increased dramatically, impressively over the last 10 years using the USD with neutralization in the inflation measurement. Now, at the moment, the stock market cap is around 55% of GDP in the US dollar. Despite such a high growth rate, the relative size of Vietnam's stock market is still much smaller than that of other economies. For example, in 2020, Vietnam market cap was only around in mid 70% of the GDP, and that of the ASEAN 5 was already 105% of the GDP, and the world average was 93% of the GDP. The quality of the Vietnam equity sector has also been improving constantly over the last 20 years. We will dig into this much deeper in the separate video about Vietnam equity market. Let's look into the bond market. The market except for bond in Vietnam is still dominated by the government bonds. So the government bond market has stabilized and tenors extended. At the end of 2021 and early 2020, the size of government bond market was around 24% of GDP, including bonds with diverse maturities, ranging from short-term 1 to 3 years to long-term more than 10 years. And in recent years, let's look into the chart. The longer terms have been issued more as compared to the previous decades or so. The short term was issued more. Okay. After a difficult period of following the global financial crisis in 2008, the financial markets have stabilized and performed reasonably well in Vietnam despite the challenges of the COVID-19 pandemic. In July 2023, the total bond market is over $111 billion, nearly 28% of GDP. Let's look at the corporate bond market. The corporate bond market sector has been growing rapidly in the last few years. Okay, it's before 10 years ago there was no corporate bond at all, but in recent years there has been many companies issuing corporate bonds. The market cap to GDP has been more than doubled in the last 3 years. Okay, it's from less than 6% to 12.5% currently in 2023. However, this is still a modest amount compared to other countries in the region, and also far from the target set by the government, but which is 20% by 2025. Here, the chart of the Vietnam corporate bond is very tiny compared to other countries in the region. So let's sum up the overview of Vietnam capital market. You can see that over the last 20 years, Vietnam capital market has developed dramatically. In 2004, the main players in Vietnam capital market were still the bank credit and the government bond segments. And as of 2011, the equity market has appeared remarkably alongside with the bank credit and the government bond. As of 2018 to now, we also start seeing that corporate bond putting a remarkable footprint into the system. Let's discuss briefly about the constraints and the opportunities of the development of the Vietnam financial market. The financial market development has a governance problem, lack of corporate transparency, weak legal institutions, and weak market infrastructure. Corporate bond issuers and brokerage companies exploit the loopholes in the legal system to sell the corporate bonds to retail investors. Most are unaware of the risk they are taking. And the second one is that Vietnam's small private sector is a problem of underdevelopment in the corporate bond market. Outside the real estate and financial sectors, very few firms can issue bonds. This is totally different from developed countries' bond markets, where bonds are issued mostly by manufacturing enterprises, making the corporate bond markets a catalyst for countries' economic development. There's a large and untapped potential for the corporate bond market that could be exploited by both private companies and SOEs, and Vietnam needs a large amount of investment into the utilities and infrastructure. This one, if you look into my previous videos, which I discussed in my videos of the development of Vietnam economy. On the demand side, there is a lack of investor base in the capital market. The investor base in the corporate bond market in Vietnam lacks diversity. Okay, banks are more main investors in the market, holding almost 72% of the corporate bonds outstanding. Pension funds are important corporate bond investors across countries in the world, but not in Vietnam. The pension system in Vietnam has been dominated by the state-owned Vietnam Social Security, VSS. And in fact, the first private pension fund was only launched in 2021 by Dragon Capital. VSS invests a huge portion of its assets in government bonds, over 85%. The issue number 4 is that financial liberalization has mostly been just achieved by the banking sector. Other financial sectors like equity and bond and insurance is still in early developing stage. The central bank started from mono banking system prior to 1986, has moved toward modernization and now focuses on more monetary policy and banking sector supervision. Still, number 5 is that international capital can supplement but not replace domestic capital mobilization. Vietnam's tight control of capital accounts makes it difficult to attract foreign portfolio investment into the country. But that is also the opportunity because it also reduces the likelihood of financial crisis. A lot of study has shown this. And that also opens now the opportunity for foreign investors to diversify the investment into Vietnam market, especially in the current flow of the market. Concentration risk needs to be considered as well. So this is also the opportunity for Vietnam.
Ủa mẹ, quả táo như tên là quả táo nó rơi xuống.
So if you are interested into the Vietnam market, please also look into my other videos where I discuss about the Vietnam economy, overview about Vietnam economy and some industries. Please also subscribe to my channel for the coming videos. Coming videos, I will discuss about subtopics in the capital market in Vietnam. Okay? Have a productive day. Bye-bye.
To be a good investor, from my own experience, following are the first important steps you need to do. 1. Prepare yourself by learning investment knowledge through reading investment, financial and accounting books from famous and successful investors. 2. Apply and practice your learning and find the best strategy that works for you. 3. Before you find the best strategy that you can make successful investment, diversify your investment portfolio and do not put all the eggs in one basket. Remember, no successes come without failures and pains. So training yourself to practice patience is very important. I hope you get some insights and learn something new from this video. Please subscribe my channel for more future videos.